All right, let's dive in. We're looking at Trident Ltd's Q2 financials for fiscal year 2025. We've got reports, presentations, and even some analyst chatter to sift through.
What jumps out is how much Trident has expanded beyond just towels, like a lot of diversification.
Yeah, it seems like they're not just the towel king anymore. So, for some context, let's set the stage.
Okay, so Trident Ltd, headquartered in India, has been a big name in home textiles for over 3 decades. And while they're famous for their towels, they've branched out. I mean, we're talking bed linens, paper, chemicals, even energy.
Wow, that's quite a range. And they're a global player too, right?
Absolutely. Their products are in over 90 countries. Get this, 61% of their FY24 business was exports. They're also a leader in sustainable manufacturing. You know, they're the world's largest wheat straw-based paper manufacturer, at least in North India for the branded copier segment.
Wait, hold on. Paper from wheat straw. That's pretty cool. I'm guessing that ties into their commitment to ESG initiatives.
It totally does. They're doing a lot on that front. 44% of their energy mix is renewable, and they've hit zero textile waste to landfills. Think about this. Their wheat straw paper production saves over 5,000 trees every single day.
That's incredible.
Mhm.
5,000 trees a day, that's a powerful image.
They've also planted 1 million trees, creating mini forests across India.
1 million trees. Wow, they're serious about sustainability. And what about their social impact? You mentioned something about women's empowerment.
They're aiming for 30% female employees by 2030. Right now, they're at 18.92%. So they're making progress. They're really trying to make a positive impact across the board.
That's great to hear. So ambitious business goals and a real commitment to making a difference. But now let's get to the heart of it, the financials. What's the big picture for Q2?
Their total income for Q2 FY25 hit INR 17,205 million. That's down just a bit, 3.10% year over year, but only a tiny decrease of 1.66% compared to the last quarter.
So revenue's pretty stable. What about profitability? That's a key indicator, right?
Here's where it gets interesting. Their EBITDA margin sits at 13.72%, and the PT margin is 5.76%. Their net profit, INR 835 million, is down year over year, but it actually jumped 13.45% from the previous quarter. Plus, they saw a bump in cash profit, reaching INR 1,743 million.
Okay, so a bit of a mixed bag, not a massive revenue surge, but profitability is holding strong, even improving in some spots. And it sounds like there's a lot more to unpack here.
Yeah.
Let's break down how their different business segments performed. Can you take us through that?
Sure. Starting with their core, textiles, including yarn, towels, and bedsheets, brought in INR 14,757 million in Q2 FY25. That's up slightly year over year, just 0.70%, but down 0.71% compared to the previous quarter. However, their EBIT margin for textiles reached 9.26%, a healthy 44 basis point improvement from the same period last year.
So textiles are doing okay, which makes sense given their history. What about the paper and chemicals segment? That's the one with the wheat straw paper, right?
Exactly, and that's where we see a different story. Revenue came in at INR 2,334 million, a significant drop of 21.07% year over year and 6.04% quarter over quarter.
That's a pretty steep decline. Is the EBIT margin in that segment still healthy despite the drop?
It is, but it's worth watching. The EBIT margin sits at 28.50%, which is strong, but down from last year and the previous quarter.
Got it. So we're seeing contrasting trends. Textiles holding steady while paper and chemicals took a hit. What are the analysts saying about this? Any red flags?
They're asking the right questions for sure. They're trying to figure out what's causing the profitability challenges in Q2, especially in paper and chemicals. Also, they're curious about any strategic moves or investments that Trident's management has mentioned.
Yeah, I imagine they're also looking at how Trident stacks up against its competitors, both in performance and their approach to sustainability.
Totally. And of course, everyone wants to gauge Trident's long-term growth prospects. These are the big questions. We may not have all the answers right now, but it's good to know what the experts are focused on.
Agreed. And speaking of experts, there's news about a leadership change at Trident, a new CFO, right?
Exactly. They brought in Avnish Barua as their new CFO. He has tons of experience in finance, accounting, and strategy. This could mean a change in their financial approach.
A fresh perspective is often a good thing.
Mm-hmm.
Any other notable events during the quarter?
Couple things worth noting. There was that fire incident at their Dala facility last quarter, likely had some lingering effects. Then there's the sale of Trident Global Core Limited, or TGCL, which led to a recognized gain.
Okay, so a mixed bag of events there.
Yeah.
Taking a step back, it seems like Trident is operating in a dynamic environment, but how does the overall industry look? What's the playing field like?
The global textile and apparel trade is huge, valued at US $909 billion in 2022. It's projected to hit a whopping US $1.2 trillion by 2030, and it's been growing steadily even with the recent economic challenges.
I bet India's domestic market plays a big role in that growth.
Absolutely. India's domestic textile market is growing even faster than the global one. It's expected to reach US $250 billion by 2031. And home textiles, Trident Specialty, are a particularly strong segment, with a projected compound annual growth rate of 9.84%.
So lots of potential, but probably fierce competition too.
For sure. The big question is, can Trident use its strengths and navigate the challenges to capitalize on this growth? They have a strong presence in both domestic and export markets, which gives them an advantage, but they need to stay flexible in this rapidly changing industry.
Right, it'll be interesting to see how they use their new CFO's expertise and their focus on sustainability to chart their course.
Definitely. And that brings us to the next part of our deep dive.
You know, talking about all these different segments makes me wonder how each one contributes to the overall financial picture. It's like different pieces of a puzzle, right? Each playing its own role.
Yeah, that's a good way to think about it. Each segment has its own dynamics, its own challenges and opportunities.
Exactly. And understanding those nuances can really help us understand the bigger picture. So let's zoom in on those individual pieces, starting with their standalone segment performance. You have some interesting observations about that in your notes.
Yeah, the standalone figures provide a granular view of each part of the business. For instance, looking at revenue alone, Yarn takes the lead, bringing in INR 9,019.5 million for Q2. Towels followed closely at INR 6,281.8 million.
So despite their diversification, their core textile strengths are still driving a significant chunk of revenue. Where do bedsheets fall in the mix?
Bedsheets contributed a decent INR 3,522.8 million. And as we've already touched on, paper and chemicals lagged behind at INR 2,334.7 million.
It's really interesting to see how those numbers break down. But of course, revenue is only one piece of the puzzle. What about profitability? That's where things get really interesting, right?
Absolutely. High revenue doesn't always equal high profits. And that's where the segment breakdown gets really interesting. Despite not having the highest revenue, bedsheets actually generated the highest profit before finance costs, exceptional items, and tax, reaching INR 632 million.
Hold on. So bedsheets outperformed yarn in terms of profitability. That's surprising. I would have thought yarn, being their traditional strength, would be the top performer.
It seems counterintuitive, doesn't it? Paper and chemicals also held their own in terms of profitability, coming in second with INR 665.4 million.
So that means yarn, even with the highest revenue, actually had the lowest profit, coming in at INR 296.7 million. Any thoughts on what might be driving that?
Well, there could be a few things at play here. Maybe the cost of raw materials for yarn has gone up, putting pressure on their margins. Or perhaps they're facing tougher competition in the yarn market, leading to some price pressure.
It's like we have to look for clues to understand the full picture. But one thing's for sure. These variations in profitability across segments underscore the importance of digging deeper and looking beyond just the top-line revenue figures.
Absolutely. It highlights the fact that every business segment has its own story, its own set of dynamics and challenges, and understanding those nuances can be really valuable.
You know, this conversation about segment performance brings to mind something else you highlighted in your notes: Trident's debt-to-equity ratio.
Ah, yes. That's a key metric for understanding a company's financial health. It tells us how much debt they're using to finance their assets compared to the amount of equity they have. And for Trident, it stood at 0.37 as of September 30th, 2024.
That's actually down from 0.50 in the previous quarter. Is that a good thing?
Generally speaking, a lower debt-to-equity ratio is seen as more favorable. It suggests the company is relying less on borrowed funds and has a stronger financial foundation.
So this decrease could be a sign that Trident is proactively managing their debt and strengthening their balance sheet. What about their ability to handle their interest expenses? Is there a way to measure that?
Yes, there's the interest coverage ratio, which tells us how well a company can meet its interest obligations. For Trident, it stands at 3.15.
Okay, and what does that tell us?
An interest coverage ratio of 3.15 suggests that Trident's operating income is more than enough to cover their interest expenses. It points to a healthy level of financial stability.
That's good to hear. It seems like they're taking steps to maintain a solid financial footing as they pursue growth and innovation. But we've also talked about external factors, like the global economic environment that could create challenges. How do those elements fit into the equation?
That's where things get more complex. It's like trying to solve a multidimensional puzzle, right?
Hmm.
We have to consider not just Trident's internal performance, but also the external forces at play that could influence their trajectory.
Almost like they're sailing in uncharted waters, facing unpredictable winds and currents.
Exactly. And that's why those analyst questions we discussed earlier are so important. They're trying to assess how prepared Trident is to navigate those unpredictable waters.
So if we step back and look at everything we've learned so far, what are the key takeaways you, the listener, should keep in mind?
Well, firstly, remember that Trident is more than just towels. They've diversified, but their textile legacy still plays a big role.
And while revenue is important, it's crucial to understand how each segment contributes to profitability. Sometimes those less obvious segments can be the real profit drivers.
Right. And secondly, Trident seems to be demonstrating financial prudence. Their debt-to-equity ratio is improving, and their interest coverage ratio suggests they can comfortably manage their debt obligations.
But thirdly, and this is key, they're operating in a complex, constantly changing global environment. Economic uncertainties, competition, even those lingering questions surrounding the tax investigation, these are all factors that could have an impact on their future.
It's like they're trying to solve a Rubik's Cube, constantly adjusting and adapting to find the right combination for success. And that brings us to the next stage of our deep dive, where we start to consider the bigger questions, the what-ifs, and the what's next. We've explored their past and present. Now it's time to turn our attention to the future.
The future of Trident, the future of Indian manufacturing, and the future of sustainable business on the global stage. These are big questions that we'll be exploring as we continue our deep dive into the world of Trident Ltd. It's amazing to think about Trident's journey, starting as a towel manufacturer and now a global player. They've come a long way, haven't they? And they're not afraid to innovate.
Definitely. They're always adapting and evolving. Look at their product portfolio, their sustainability efforts, and how they're navigating the financial world. They're constantly trying to stay ahead.
It's what makes this so interesting. We're not just looking at numbers. We're looking at a company that's shaping its own future. They want to make a positive impact and be successful at the same time.
Yeah, it's a story that resonates, Challenges, opportunities of going global, doing business ethically, and how Indian companies can make their mark on the world.
It's inspiring. But as we wrap up, I keep coming back to this question.
Mm.
What does Trident's journey tell us about the future? What's next for them?
It's the big question, right? Can Trident grow and still be sustainable? Can they handle a changing market and stay financially strong? Can they truly become a leader in ethical manufacturing?
I guess time will tell. But Trident's story is definitely not over. They're always changing, always evolving. It'll be fascinating to see where they go from here.
Absolutely. And for you, the listener, there's a lot to take away from this deep dive. You've learned about Trident's financials, their strategies, and the industry they operate in.
And we've talked about the role of business in society, the importance of sustainability, and how complex global trade really is.
You've got a much deeper understanding of Trident now, and you can use this to analyze other companies and make informed decisions as a consumer, a global citizen.
Exactly. So, as we close out this episode of The Deep Dive, we encourage you to keep exploring, keep questioning, and never stop learning. Because in a world that's always changing, the journey of knowledge never ends.
Couldn't have said it better myself. And on that note, we'll say goodbye for now. Until next time, keep diving deep.